What are you advising your clients to do after what was a pretty red-hot start to the year for stocks?
Yeah, I mean, I think stay the course, but I think be mindful that we may not be through all the volatility. We certainly, here's where it gets difficult. The payrolls number certainly changed my math on, bringing down some of the odds of recession. Didn't change that. Still think it's going to happen. It's just, makes me less sure of that call. So you've gotten a lot of the growthier stocks repriced quite a bit, that 7% move in the S&P, and obviously much higher on a lot of the growth side of the equation. It's unclear whether we get that soft landing or not. Certainly the market thinks inflation is going to get taken care of eventually. Maybe a soft landing, at least partially priced in there. So when better news is priced in, you do have to be a little more careful, I think.
Yeah, Goldman Sachs reducing its recession odds down to 25%. That jobs number certainly helping as well. But, we just keep hearing layoffs. Maybe we're going to have, sort of peak earnings and everything, but energy and a few other select sectors as well. I don't know about you, Bill, but I've been doing this I'm getting old, I guess. Been doing it a while. How about that? I'm not sure I've had a year where I've had less visibility about what may happen with the American economy. What about you?
Yeah, I agree. I got to say, I felt quite sure of myself last year that, with the yield curve inversion and everything else, or pretty much every yield curve inverting, that you were highly likely to see a recession. I still think, by the way, I have my odds higher than Goldman. But that being said, you're right. You've just got this undercurrent where if jobs are going to hold in, what we do know is, I'll give the bull case around it, which is if jobs hold in, frankly, 80% of this economy is the U.S. consumer. The U.S. consumer continues to spend. We do not have to go into recession. There's no law that says it. So I get that. It's just, obviously, and you can look around in the economy. I can find you a piece like housing that looks like a mess, although honestly, a little bit of bouncing seen in that recently. Yeah. Again, off a big low, though.
Yeah, housing has held up in many areas, particularly like in the D.C. area, which, of course, tends to prosper anyway, better than many have expected. Very quickly, Bill, though, with that sort of lack of visibility, is it fair to pay about 17.5 to 18 times forward earnings for the S&P 500? Does that seem like the right multiple to you? Because if it's not, it means stocks may need to go down or earnings may need to go up.
Yeah, I mean, I think obviously maybe I'll put bad news as good news. We've continued to see earnings estimates kind of slashed for 2023. But then, obviously that gives you a chance to maybe get over that or go higher than that if we actually do get the soft landing. I think the second part is a lot of that valuation is concentrated in a small number of stocks. So you can find, particularly if you go into the smaller caps, extremely cheap stocks now.
Small caps the place to be, you think?
I think so. I think they're relatively inexpensive. Okay. And if we get a soft landing, they will particularly be strong.